Hello, everybody. I think we are ready to go. So let's start. Warm welcome to this webinar and many thanks for joining us today. As you know, carbon dioxide removal will play a critical role in achieving our climate targets. And so we are very pleased today to see a large attendance to this webinar and a lot of interest for this topic. My name is Laurent Müller. I'm a corporate partnership manager at Climeworks, and it is my great pleasure to be here to discuss about the business case for carbon dioxide removal. I will do a very short introduction about Climeworks. What do we do at Climeworks? At Climeworks, we develop, we build, and we operate direct air capture plants. What is a direct air capture plant? A direct air capture plant, you can imagine that it's a very, very large filter, which is filtering the ambient air to capture the CO2. Once we have captured the CO2, what do? We actually inject very deeply the CO2 to store it permanently. This is what we call geological storage. In our case, we have a mineralization process also associated with that. The process of capturing and storing CO2 generates carbon dioxide removal. In our case, a very high quality carbon dioxide removal. And the business model of Climeworks is actually to sell certificates to companies, to individuals of carbon dioxide removal, sometimes also called negative emissions. These certificates of carbon dioxide removal are there actually to remove the unavoidable emissions of a company, the emissions you cannot reduce technically or economically. Today, we will have the pleasure to discuss the business case for companies wanting to engage on carbon dioxide removal. Why should a company buy carbon dioxide removal certificates? And for this conversation, we have the great pleasure to have Mitchel Selby from Shopify with us. Shopify is one of the very first company which has actually pioneered the carbon dioxide removal space. And Mitchel is a program manager for Shopify's sustainability fund and will share his experience as a CDR, as a carbon dioxide removal buyer. Welcome, Mitch.
Thanks so much, Laurent. Really happy to be joining you today to talk about this topic. I guess I can quickly just give an intro on myself and Shopify. So I'm Mitch.
Yes,
I work on our sustainability fund, as you said. Just briefly on Shopify, we are a leading commerce platform. We help entrepreneurs start, manage, grow their retail businesses of any size. You're probably most familiar with Shopify as a place where entrepreneurs can set up their online stores and reach buyers around the world. And then we have this sustainability fund, which is a $5 million annual commitment to spend on the most promising climate solutions out there. And a big focus of our fund is carbon removal, buying credits from companies like Climeworks. And specifically myself, I'm a program manager on our sustainability fund team. So my role is to identify companies we want to buy from, negotiate agreements with these companies, and then after signing agreements for purchasing credits to continue to support the companies post-purchase, I do things like reviewing MRV plans, providing advice for companies based on what we're seeing across the market, signing letters of support, and the list goes on because there's so much more you can do just beyond making a purchase of carbon removal.
Great, thanks a lot for this introduction, Mitch. Shopify is for Climeworks a very important partner, not just because you were one of the first to move in this space of carbon dioxide removal, because also recently you published a very, very useful guide on how to buy CDR. Perhaps you will mention it a little bit later. And finally, because you are one of our launch customers, we were really, really proud to deliver end of last year a first batch of certified carbon dioxide removal, certified by a third-party organization to Shopify. So it's really a pleasure to have you here and to enjoy all the insights that you will be able to provide to the audience. We're coming to the end of the introduction. So how will the webinar be structured? We will have 3 topics we would like to discuss with Mitch. The first one is the reason for a company to buy carbon dioxide removal. What is actually the main motivations for a company to buy? then how to select the right criteria among all CDR solutions on the market, and finally, why there is an urgency to act now on buying carbon dioxide removal. Then we will have some questions. We have collected questions from participants before this webinar. You can also post questions on the Q&A panel, and we will try to cover them if we have enough time. So let's start now with the first topic, which is the reason to buy. To come to our to achieve the Paris Agreement goals, we know that we need to be net zero by 2050, and we see a lot of companies today who set their own net zero targets, very often in advance of 2050. And Shopify has a little bit of different strategy here by not having a net zero goal, but still is buying carbon dioxide removal. Can you explain us a little bit what is the motivation of Shopify, and perhaps a little bit more what is the overall strategy?
Yeah, so for us, it comes down to our merchants and our business viability. So our merchants, we have millions around the world that use Shopify's platform, and many of them are already starting to feel the physical effects of climate change. So we know as a company, we need to take climate action in order to help them preserve their businesses, but also preserve Shopify's business in the long term. When we launched our fund back in 2019 and started buying carbon removal, we knew CDR was going to be a big piece of the solving climate change puzzle alongside deep emissions reductions. But when we looked out in the market, there was just no supply. So we set out to be a demand signal for what we wanted to exist in the long term. We would buy carbon removal credits from the leading carbon removal companies at the time, like Climeworks, who were still very early back in 2019. This would be a demand signal to them to continue to scale up. And then our demand signal will also tell innovators that hadn't yet entered the market to enter the market with new ideas for novel carbon removal solutions. And our goal really was to help existing companies scale, new companies enter the market and scale, to allow them to identify cost reductions, grow their capacity, drive down costs, and increase the supply and lower the costs for CDR in the long term. And while we don't have a net zero target, net zero is definitely in the back of our minds all the time. It's definitely a future state we want to achieve as a company. And we believe, like all businesses as well as the economy, should be headed there. We've ran the numbers for ourselves, and the amount of CDR Shopify will need come, let's say, 2030 is well above the current supply of CDR available today in the market, and we're just one company. So that just further indicates the need to be buying CDR now to increase supply.
Thank you. Thanks a lot for this answer. So can we say that creating impact for you in scale the industry is more important than achieving net zero goal in 2030 or 2040?
Yeah, I think like the original impetus for all this was to help reverse climate change and to kickstart a solution we thought was going to be a big piece of the puzzle. As net zero has become more and more talked about, it's something we've started to think about, and we also recognize as something that's important. But I would say it's kind of number two after delivering impact as a company on the climate space. Okay,
great. From our customers on Climeworks side, we see some further motivations that come besides what you are saying. One is perhaps to differentiate from competition, so to show a leadership role on this discussion, and perhaps also sometimes to anticipate regulatory markets or a price on the carbon that is currently not existing on most of the emissions. Do you also have those kind of thoughts in your motivations for action?
Yeah, I think for sure. I think it was less about we knew upfront those were our motivations, and more about as we've explored the space and started to be a buyer. And that's kind of when we've realized there are these additional benefits to buying CDR, like the ones you described. Happy to talk about some of those in the context of Shopify and what we've seen.
Yeah. Perhaps I think anticipating the regulatory market is not something which is obvious for everybody. If you can perhaps say 2 words about how you perceive that.
Yeah, so I mean, for Shopify, like we're a voluntary market participant. All of our credits we're purchasing are strictly for voluntary commitments, like being a carbon neutral company, to doing promotional activities with our merchants. And our footprint is relatively small, so I'm not sure. I think it'll be a while until Shopify is regulated and is like forced to buy carbon removal. But I think we will be prepared when that time comes by the work we're doing right now. I think other companies with larger footprints, heavy emitters, will likely face a reality in the near future where they're required to buy carbon removal. So I think it's important for them to act now to kind of anticipate that requirement in the coming years.
Great. So perhaps to summarize a bit on this topic, if we say that the main motivation on your side, on Shopify side, was really to scale up the solutions, create the market, and have impact. This clear demand signal that you wanted to send to all your stakeholders, help company to scale. And then we see also by other companies a bit this demonstration for climate leadership and the anticipation of regulatory markets. Did I forget something about the key motivations, or is it a good summary, you think?
No, I think that makes a lot of sense.
Perfect. Let's move then to the second topic, which is also a very interesting one and can be quite a complex one. When a company wants to buy for the first time carbon dioxide removal, they will find a lot of different solutions on the market, and with very different levels of quality. So one of the first action probably is to define the criteria that will be used to select the solutions that make sense for a company to select a specific or several specific solutions. Can you perhaps share a little bit how you have selected or you have defined those criteria of selection at Shopify?
Yeah, so I think the folks at Climeworks dropped our buying guide into the chat window for you all to see. This is all in there, what I'll talk about now. So if you don't pick up everything I'm going to talk about now, you can definitely reference that. But we've laid out, I would say, 7 critical criteria that we assess carbon removal companies on when we go to make a purchase. I think there's 4 that we call non-negotiable, and then 3 that we say are critical, not quite non-negotiable, but also definitely need to be considered by a buyer when making a purchase. So yeah, to dive into some of those, the non-negotiable criteria, the first is probably the most obvious one. The solution has to be net negative. It has to be removing more carbon dioxide from the atmosphere than it's emitting through the process. And then additionality. So the solution has to be removing carbon dioxide because of the purchase made by the buyer and no other reason. And I think that's quite obvious in the case of Climeworks. I don't think Climeworks would be building these facilities unless there was demand from the buy side. So in the case of Climeworks, the additionality argument is quite clean. Beyond additionality, environmental justice is a really important topic when assessing carbon removal companies. XPRIZE and Carbon 180 just collaborated on a really excellent report for carbon removal companies, how they should be building environmental justice into their planning. I would encourage carbon removal companies to reference that, but also buyers to reference that as an example of what they should expect from carbon removal companies that they're going to buy from on the environmental justice side. And then the other key criteria I want to bring up is verifiability. So the solution has to be, the credits that are generated have to be able to be quantified to a reasonable level. And in the case of direct air capture, that's quite clear. It's quite easy to measure the carbon dioxide that's being removed and stored by a solution. For open system solutions like ocean solutions and enhanced rock weathering, that's a bit more difficult. Doesn't mean it can't be done, but I think in the case of direct air capture and Climeworks, it's easy to be comfortable with the verifiability criteria. I'm just going to take a quick drink of water. And then beyond those criteria, the criteria that are critical for consideration, I'll kind of bring those up as well. The first being durability. So we kind of say the longer the solution can store CO2 outside of the atmosphere, the better, just because we don't want our progress to be reversed before we're done reversing climate change. And then scalability. So we need to be heading towards gigaton scales of carbon dioxide removal according to the IPCC. So we want to be supporting solutions that have the ability to, on their own, draw massive amounts of carbon dioxide out of the atmosphere on an annual basis. And then the last, which is quite interesting for direct air capture, is cost. I think a lot of naysayers for direct air capture think this technology can't get to a cost that is reasonable for credit buyers to have to pay in the long term, and will isolate credit buyers that are more price sensitive. We like to reference a cost target of $100 per ton or less in the long term. And I'm curious, maybe Laurent, you could talk to how Climeworks plans to reduce costs and get close to a target like that.
Yeah, happy to speak about this. I see that the question already popped up in the Q&A. That's a very legitimate question. So perhaps to put the context on the price or the cost, it's important to understand that we are really still in the early day of the DAC industry. I think it's also correct to say that for other technical solutions besides DAC, we can compare that perhaps our status today to the wind or solar industry from the 80s. So if we are looking at the curves, let's say the scaling curve and the cost reduction curve from those industries like wind, solar, or batteries, we see that we have a big potential through our scale up, through our development, to reduce our costs significantly in the future. Today, Climeworks costs are in the triple digits, the high triple digits area per ton of CO2. And we are, of course, working days and nights on reducing that. How do we want to achieve this? I would say there are two key factors to do that, or two directions. The first one is scale effects. So just to multiply the quantity of plants and to build bigger plants, that's quite proportional. Then we know that we have scale effects by building the supply chain, have dedicated also industry and suppliers to our industry. And the second point that will contribute significantly to reduce our costs is, of course, the technology, so increasing the efficiency of our plants. And that's why we invest a lot in research, development engineering, to make our plants more efficient, so to be able to capture more CO2 by unit of energy, to capture more CO2 by unit of sorbent. That's the two main drivers on which we have a direct impact. Then you have, of course, the policy side. What will the governments do to help us? We see now a big move with the Inflation Reduction Act in the US that helps actually to reduce our investment and also our OPEX, and will help us to provide a bit lower prices to our customers. So on the long term, $100 I think is not impossible, but it's quite a big challenge. I think we can land between $200 and $300 a ton in the long term. That would be quite a good target. But here it's a bit a crystal ball. What we know is that we have the potential to reduce a lot because of actually this acceleration we will have in scale up, and because of the technological development we can have. So as conclusion, I think to be able to reach a much lower price, we need everybody. We need on the supply side to be very, of course, focused and work as fast as possible. We need our customers on the demand side to show that there is a market for that. And we need also the public side, so the governments, to help and help us by taxes to make our price more accessible to customers. That's, I think, what I can say on the cost side and price side.
Totally. Yeah, it's great to hear you talk about that. And these are questions that we talk about a lot in our meetings when Climeworks and Shopify connect quite regularly. And it's a question, like, these are questions we ask all of our suppliers, and we also require detailed techno-economic analyses to back up these explanations. And it can be quite a lot of work to assess companies on all these criteria, including costs. So I encourage you, if you don't have the expertise in your company to do this, you can often rely on the work that's being done by ourselves and other folks, other early buyers like Stripe and Frontier, and rather having to go through the assessment against all these criteria yourselves, you can often just end up buying from the same companies we're supporting.
That's a good advice, of course. We can also confirm that Shopify and the early buyer did very detailed due diligence to select their suppliers. And perhaps the last point on the price, you understood why we are at this price today. I think it's also very important always to link a price with the quality of the carbon dioxide removal and also with the risk that the company is taking in working with a certain supplier. On our side, on Climeworks side, we have perhaps one of the highest quality on the market on the criteria defined by Mitch just before by you. We have a very high measurability, a high permanence, and so on. So we provide a high level of quality that can benefit to our customers. And in terms of risk, we have also now experience from the field. We are backed by quite big investors, and we have a strong customer base that makes the investment in CDR from Climeworks a less risky choice for companies. So that's also factors that need to be taken into account while you are contemplating a certain price per ton.
Absolutely. And I think as a buyer, you need to be understanding of the place companies like Climeworks are in right now and be willing to pay those high prices in the beginning. You should be willing to cover the full cost of the carbon removal, CapEx, OpEx, monitoring costs, verification, storage, because paying that price up front is what's going to get them down the cost curve in the long term. So it's a price we have to be willing to pay now to have those low prices in the future.
Perfect. Thanks a lot for this summary. I think on the price, we can perhaps stay here on the criteria you mentioned before. I will not repeat them. I think just having a look at your document on the buyer guide from Shopify is very good and will allow all the agents to have access directly to these criteria.
Great.
Then I think we can progressively move to the last topic. So there is very often this question, why should we act now? There is this perspective of the industry progressively reducing the price. So there is a temptation when there is not an urgent net zero target to reach, to wait a little bit that the prices are reducing before signing an offtake agreement and committing in some offtake. So in your opinion, Mitch, for which reasons should company act now and sign offtake agreements with suppliers now?
Yeah, so I think like the idea that you can wait for supply to increase and costs to come down, and by then it doesn't necessarily work that way, because in order for that to happen, you need to buy now to make that happen. So I think you just have to get started as soon as possible, especially if you have a net zero target and you're bound to some sort of or bound to getting to zero by let's call it 2030. I think without acting now, when 2030 hits, without acting now, you're not going to have the supply of CDR you need to zero out your unabatable emissions and hit that target. And even if you don't have a net zero target now, you could be required under a compliance scheme in the future to get to zero. And there's no time to wait. The buyer base just isn't big enough right now. I think like there's a few $1 billion in terms of, or sorry, a few $1 billion committed in terms of what's actually been contracted to date, or what's out there in terms of commitments for buying CDR to date. And in order to reach like large scales of CDR by 2030, we need to get to kind of tens of billions of dollars in purchase agreements per year, scaling up to 100 billions of dollars in purchase agreements by 2030 and beyond. This just indicates the kind of scale we need to get to, and that we just need the buyer base to be larger to help companies like Climeworks get there.
Yes. So net zero is one motivation. Can we also, and securing capacity is another one, helping to scale.
Yeah, maybe we could
Yeah.
talk a bit about securing capacity,
Yeah.
Laurent, because I think like this is going to be a supply constrained market for a while. Maybe you could share like how far into the future you've sold out Climeworks tons to. If you have a 2030 net zero target and you're going to require CDR for that, and the leading companies you want to buy for, like Climeworks, are already sold out well into the decade, you're going to have to start thinking about where that supply is going to come from, and start acting now.
Yeah, that's about those 4,000 companies having a net zero target approved by SBTi, and much more will come. So if you add all those commitments that are now public, and you calculate the quantity of volumes of CDR which are required to be for those companies to achieve those goals, it come to, of course, to a volume, total volume, which is much bigger than what the company in developing high quality carbon dioxide removal can supply. So there is really this big question here, how those companies are now planning to have access to CDR, not any CDR, but the CDRs which have the right quality for the standards that will be enforced at this moment. So complying with the greenhouse gas protocol, with SBTi requirement. And we see clearly the trend that those organizations are requiring more and more high quality carbon dioxide removal. So we think that there will be a real constraint on the available capacity, and the companies now reserving at least one part of the capacities they will need in the future, I think are doing good risk mitigation job, and will with that have a bit an easier life in the future. That's what we see a little bit from Climeworks side.
Maybe we could also talk a bit about like risk mitigation in terms of like protecting your company's brand related to the offset market. I don't know if that's something you think folks on the call would be interested to hear more about.
Sure. Yeah.
But I think like something Shopify has been able to avoid over the last few years by getting started buying CDR early and avoiding the offset market is all of the criticism the offset market has faced over the last few years. I think there's been a surprising amount of investigative journalism done into the offset market, the quality of these credits. And I mean, we've seen the articles come out over the last few months, from the Guardian article to the other articles that came out in the fall. I think one in Bloomberg. A lot of existing offset projects are being debunked, and the buyers of those projects are being exposed in the media as well. I think the Bloomberg article in the fall listed 30 companies that were buying, I think they called it bogus offsets, and then the Guardian article from January listed, I think, 6 companies. So it's something Shopify has been able to avoid by getting started in CDR early and avoiding offsets. And I would encourage for like the point of risk mitigation for other companies to do the same. At the same time, we've also seen like positive benefits around buying CDR. So this is quite interesting. We didn't have any PR folks assigned to our team for the first couple of years, but over time, as the media has become more and more interested in CDR and has become more excited about it as an option for corporate sustainability, we've now taken a lot of Shopify PR folks, and they've been assigned to our team to field inbounds and opportunities to speak and for pieces about Shopify in the media. And I think there's still space for new buyers to take advantage of that potential positive media attention. There's still like so few buyers, and the media looks at it so positively right now. Even if you are a follow-on buyer, there's still an opportunity for you to benefit from that for your company.
Absolutely. We also see this appetite to communicate about carbon dioxide removal partnerships. This is really true. And we also see those signals from companies now digesting a bit the news from the articles you mentioned before, and now reassessing their strategy for offsetting. And I think we are really seeing now a transition happening, or accelerating, because it was already happening before, but an acceleration of this transition towards high quality credits, which will get progressively really the standard, and that's the right way to have it for sure. And yes, I think there is enough space to still have a positive impact on PR, because there are a few big players who spoke about it, but there are a lot of industries where it's not yet established, where carbon dioxide removal is not yet at all mainstream or known. Same about geographies. There are still geographies where we are still at the beginning of this discussion. So I think there is a lot that can be also done on the communication side. Perhaps another
100%.
point I would add for the urgency to act is not to underestimate the knowledge which is necessary to be able to buy at a large scale carbon dioxide removal like you are doing it now. You need time to understand how this industry is working. You need time to find the real suppliers, to understand how those contracts are done, which risk you are taking, who are the right players, and so on. And if you start perhaps early enough, perhaps not with huge volumes, but just gaining the experience of working with suppliers, selecting the right ones, getting the first deliveries, making sure that the certificates that you will get are fulfilling your requirements, are fulfilling the standards you want to comply to. That takes time. And that's why starting early here also is, I think, a very big benefit. Not speaking about cases like Shopify, where companies are really shaping and influencing this market overall. That's an additional benefit, I would say, of companies really now engaging and being able to influence on the supply side, on the policy side. So that's also, I think, an important benefit of starting early.
I couldn't agree more. And like, there are resources now, which makes it a lot easier to get to that end state you're describing, where you understand how to procure large scale or large amounts of CDR. I think like the early buyers like ourselves are totally open to conversations with new buyers, to guide them through the process, to share our knowledge we've gained over the last few years. So it definitely takes work, but it can be done by relying on others. And you don't have to have a massive corporate sustainability team to do this. It's not too complicated when you actually look under the hood, and there are resources available.
Perfect. Thanks for this comment. Anything else you would like to mention on the urgency to act now? Otherwise, I would go perhaps to the questions.
Yeah, I think we've covered a lot of it. Like, we've talked about, if you have a net zero target, you're going to need this stuff, and it's not going to be there if you don't kickstart it now. We've talked about the regulatory potential, the potential for regulatory requirements in the future affecting your company. We've talked about the potential media benefit, the opposite, where there's negative implications for being grouped in the offset market. I think another thing is the potential impact on future employees. I talk to a lot of employees that join Shopify, and they message me and say, hey, your approach to buying CDR and doing something different than what a typical corporate sustainability team would do was one of the reasons I joined the company. So I think there are benefits there. We talked about supply, potential constraints. I think those are a lot of the big ones.
Thanks for summarizing. So let's move to the questions. We have a few ones prepared already based on the questions we received before the start or during the registration process. Let's see if we can go through all of them, and then we will pick up questions from the Q&A panel. The first question to you, Mitch, is not a very easy one, but a very interesting one. Is how long can the markets continue to grow based on just voluntary carbon market commitments alone? And that's a very good question, I find.
Yeah, I would say like not much longer. I think like the sooner compliance schemes can require companies to buy CDR, the better. I referenced some numbers earlier in the call. I think like only a couple $2 billion either contracted or committed by the entire voluntary market right now. And the fact that we need to get up to 100 billion or more every year in purchases, I think that's not going to come from a few additional voluntary buyers on their own, or even a lot of voluntary buyers on their own. There's going to have to be requirements on heavy emitters and others to purchase CDR in order to reach those massive purchase amounts annually.
That's interesting. I had a perhaps a bit more positive answer, considering that most of the money coming from the voluntary carbon market is going now to avoidance and reduction offsets. That this money will progressively, hopefully, transit to higher quality credits, and then this money is there and continue to be available. So don't you think that this can help also for a few years more to scale up the high quality carbon dioxide removal?
100%. I think that's a really good point that I missed.
Yeah.
So might buy us a couple more years.
yeah, I hope so. And yes, we see. I think another point that can be also interesting is that we see now from the markets commitments coming from basically the tech industry, the finance industry, and perhaps professional services and a few other ones. But the large emitters have not started really putting money on this. But there is all this industry of high emitting or other industries perhaps having a bit lower margin, but still able to commit to high quality carbon dioxide removal, which is not yet engaged. And I think that we can walk in this direction, make those industry also committing and engaging in carbon dioxide removal, and hopefully with that continue to scale the VCM for a few years.
Yeah, I would love that to happen. I think like the situation you described, where we get other industries involved in the voluntary market and money comes from offsets into CDR, I think would be an amazing outcome.
Let's cross our fingers. What is the main hurdle in upscaling the DAC capacity, and how should it be addressed? I think it's a DAC specific question. Perhaps I can take this one.
Sure.
I think to scale the DAC industry, we need to build larger plans. To build larger plans, we need to have investors on board. And how do we have investors on board is to have more customers on board. So signaling the demand that you mentioned before, Mitch, is really about this. It's about showing that there is enough demand to have investors confident about the business case and putting money at good rates, at good conditions available for the DAC industry. So this is really one of the key points. And then you can discuss how you make buyers comfortable by buying carbon dioxide removal. We spoke about the price, you spoke about the criteria. I think on our side, what we see is that as soon as we will have solid MRV and with standards which are well established, that will help a lot also to create the confidence of buyers and create even more demands and unlocking more capital to fund new plans. So this is the mechanism in general, and of course the policy needs to follow to reduce, to help us to be more competitive, like what we are seeing in the US. Hopefully we'll have something similar in the European Union one time and in other geographies. So that's, I think, the key drivers to accelerate the scale up of the DAC industry. Perhaps just now a question getting a bit out of the DAC. Can you comment perhaps on the different maturity I restart, what is the maturity of the different carbon removal technologies? So you're investing in different technologies. Can you comment a little bit on the level of maturity?
So it's definitely wide ranging. There's companies just fresh out of the lab all the way up to companies like yourselves, like Climeworks. I think in our portfolio specifically, we're comfortable buying from any companies that are at least at a proof of concept level, all the way up to commercialization. I think as a buyer, you can kind of decide based on your level of risk as a company where you want to support companies in terms of their maturity. If you're more risk averse, perhaps you want to support companies that are more closer to commercialization. But if you're also interested in supporting really early stage innovation, I'd encourage you to do something similar to us, where you're also supporting companies that are still at proof of concept.
All right, thank you. On another question, which is also interesting and quite tricky, is how do you measure the impact of the carbon credit purchases you are doing on the development of the CDR industry? You explained at the beginning that you want is to create demand, to scale faster, and to create impact. Is there a way to measure the impact of a credit you buy at a company?
So what we do at Shopify is every year we send a scorecard out to our suppliers in our portfolio. Laurent, you should be getting that soon. And we're collect various metrics from are there construction milestones being met that we've outlined around agreements? Are their costs coming down? Is their capacity increasing? Are they bringing on new buyers? Metrics like that, which tell us whether our thesis is in fact working. We collect that from each of the companies in our portfolio, and then kind of aggregate those numbers and see as a whole across I think it's 28 companies that we're now buying from. How is the market trending as a whole? And sure, it's not all 200, 300 CDR companies out there, but with 28 companies, we get a pretty good idea of how the market's moving. And I expect we'll actually release some of those insights probably in Q2 this year. So stay tuned for that.
Great, looking forward. Perhaps a question that came in the chat I can take quickly to give a bit more insight on Climeworks. What is the timeline for scale? Climeworks and market outlooks 2030, 2050. So the IPCC is telling us we need to have something around 5 to 10 billion tons of carbon dioxide removal per year by 2050. That's what the science is telling us. So we think that if the dark industry can provide around 1 billion ton negative emission per year in 2050, then probably that we are doing the right share. Because we didn't say it, but of course, direct air capture and storage is just one solution among other ones, and we will not be able to remove all the emissions that are unavoidable, or historical emissions. So the target for the dark industry, we set it at 1 billion ton per year in 2050. And if we want to be at this level in 2050, we think that's a decent target is to be at 1 million ton yearly capacity by 2030. So we are today building a plant called Mammoth with a nominal capacity of 36,000 tons yearly capacity. We are currently working on the design of the next plant, which will have more or less a capacity 10 times bigger. And with that, we hope to come by 2030 with an installed capacity of approximately 1 million ton of removal per year. That's for the scale up of Climeworks. Another question perhaps is to you, how can pioneering companies like Shopify help support tech inclusive policies and MRV regulation? Are you active in policies and also shaping regulations? MRV
I would say
regulations?
Not as much as some of the other early buyers. I think we'd like to be. It's just a matter of capacity on our team. We still have quite a small team responsible for all of this. Policy is an area where I think it would be amazing to put a lot more focus on. We just have decided to prioritize other things. What we do is sign letters of support we'll sign on to letters written by the CDR companies in our portfolio to policymakers if we agree with what they're asking for, such as tech inclusive policy, but we don't do too much in terms of lobbying ourselves beyond that.
All right. I think thank you for answering this question, Mitch. I think we are coming closely to the end of the discussion. It was great to have you on board. Thanks a lot for all the insights and the fantastic work that you are doing within the Shopify team. And sorry for all the questions we could not answer today. Thank you for your participation today. I think we understood how it is important for companies to act now. Carbon dioxide removal is not the silver bullet to tackle climate change, but it is a must-have. It is clear now, the science is telling it also. And I think today we could repeat how much the private sector is important to make sure that the carbon dioxide removal will contribute in the future. If you want to know more about Climeworks, the Climeworks team and myself, we are of course available anytime to have a discussion. Please feel free to contact us. You see on the screen a QR code. If you would like to share any feedback on this webinar, more than happy to receive your comments. Mitch, thanks again for your contribution today, for making yourself available and for being such a fantastic partner. Thanks to the audience for listening to this seminar, and to all of you, wish you a lot of success in the deployment of your climate action. Have a good evening, have a good day, and see you soon.